Hello everyone, welcome to edupediaworld.com. Today we are going to learn about one more income which do not form part of the total income. That is, it is exempted, that is some part of it according to the conditions given is exempted and the remaining part is taxable. And that income is leave encashment. We'll study what is this leave encashment, how and how much of this leave encashment is exempted, what are the conditions for its exemption, and we'll see one example covering this whole topic. So let us start. What do we mean by leave encashment? While an employee is in service, he is allowed various types of leaves like medical leave, gazetted holidays, casual leaves, etc. So an employee is allowed various types of leaves by his employer while he is in service, like if he falls ill, then he is allowed medical leave. Obviously, gazetted holidays are always there, like Independence Day, Republic Day, etc. All these national holidays are allowed as leaves to the employees, as well as there are some casual leaves. So in total, every employer provides their employees with a certain number of leaves in a whole year. Now, there are some types of leaves which can be carried forward to the next year, whereas there are some leaves which cannot be carried forward to the next year. This is the policy of the employers, that some of the leaves which an employee does not avail during one year can be carried forward to the next year, but some leaves cannot be carried forward to the next year. So either he avails those leaves in one year, or there is option for the employee. So what is the option? In case an employee does not avail all the leaves which were allowed to him, he may also encash these leaves and earn salary for the number of the days which were allowed to be taken as leaves but were not availed as leaves. So this is the option available to an employee if he is not availing all the leaves which were allowed to him. And what is that? He can encash those leaves, meaning he can earn salary for these leaves which were allowed, which he did not avail. So now he will get salary for those number of days not taken as leaves. So this is what is known as leave encashment. This is what we mean by this term. If I am not availing any leave during the year, then I can get salary for those leaves from my employer. The policy of number of leaves allowed to be taken and the leave encashment depends on the employer for whom you are working, and different employers have different policies for leave encashment. Obviously, different employers have different policies for this leave encashment and the number of leaves allowed to an employee. So it varies from employer to employer. But the basic thing is that we can earn salary for the number of days which were allowed to us as leaves, but we did not avail those leaves, rather than we worked on those days, and thus we are eligible to get salary for those days. So that is what we mean by leave encashment. So now we'll further study how this leave encashment is taxed and how much is exempted. Now, after studying the term of leave encashment, the definition of leave encashment, now we have to further study how this leave encashment is taxed. What are the provisions given in the IT Act for the taxation of this leave encashment? In case you have not taken leaves and have opted for encashing these leaves, your employer would be paying you some amount as leave encashment. This we have studied already in the previous slide, that if I am not availing the leaves, I can encash my leaves, and for that my employer will pay me. So the amount so received on account of encashing the leaves not availed would be liable to tax under the head income from salary. So this leave encashment, the amount which I'll receive on account of this leave encashment would be liable to be taxed under the head of salaries. However, At the time of filing of income tax return, certain exemptions would be allowed from the amount received as leave encashment, and the balance amount would be taxable as per the income tax slab rates in force for that year. So as we have done in all the other types of income under section 10, in this also there is a provision that some part will be exempted and the remaining part will be taxable. So as we have studied in all other provisions, all other sections of section 10, that is income not forming part of total income, like gratuity, pension, HRA, whatever the case may be, in all these incomes there is a provision that some part will be exempted and the balance will be taxable. So here also the same thing applies. Some part will be exempted and the balance will be taxable. So this is how the taxable amount will be calculated. The amount exempted will be deducted from the amount received as leave encashment, and the balance will be chargeable to tax as per the income tax slab rates. Now we have to learn what is the amount of exemption allowed in case of the money earned on account of leave encashment. So let us now study the provisions of taxation and the provisions of exemption of leave encashment. Now let us study the computation of amount exempted from leave encashment. How the amount to be exempted will be calculated. For this, we have to divide the encashment of leave into two major categories, that is encashment during the tenure of service, and number two is encashment at the time of retirement. Now, for encashment of leave during the tenure of service, it is given that leave encashment to an employee while he continues to be in service with the same employer is fully taxable and no exemption is allowed. So if I am getting any leave encashment from my employer while I continue to be in service with him, then that amount received as leave encashment is fully taxable in my hands and no exemption is allowed. Now the second category, encashment of leave salary at the time of retirement. What happens if I encash my unavailed leaves at the time of retirement? Exemption from amount received as leave salary at the time of retirement is available under section 10, subsection 10AA. So this is the exemption only at the time of retirement. Now, for this purpose of availing exemption under section 10, subsection 10AA, the employees are divided into two types of categories: government employees and non-government employees. This type of division we have already studied in gratuity and pension also, because the government employees were exempted and the non-government employees were taxed as per the provisions. So here also the same thing, we divide the employees into two categories: government employees and non-government employees. The first category comes the government employees. Here also it is specifically mentioned that central government and state government employees only, and no other employees who are indirectly in employment with the government. Only the central government and the state government employees are given this benefit. And what is the benefit? Leave encashment of accumulated leave at the time of retirement, whether on superannuation or otherwise. Superannuation means the completion of term of service, or otherwise. Maybe he can retire due to some other reasons. Whatever may be the reason, the leave encashment at the time of retirement received by a government employee is fully exempt from tax. So this is a benefit for the government employees, that leave encashment at the time of retirement is fully exempt from tax. No tax would be levied on any amount received as leave encashment by government employees on retirement. So if I am a government employee and I am encashing my leaves at the time of retirement, then those leave encashment amount will be exempted from tax. Now we will see how this leave encashment is dealt with in case of non-government employees. Other employees, that is the employees other than the government employees. Leave encashment of accumulated leave at the time of retirement, whether on superannuation or otherwise, received by any other employee, that is, except those covered above, is exempt from tax to a certain limit. In case of government employees, full amount was exempted, but in case of other employees, this leave encashment is exempt from tax only up to a certain limit. And what is the limit? The limit is the least of the following shall be exempted. These are the four conditions, four figures, and the least amongst these four figures will be exempted and the remaining will be taxable. And what are the four amounts? Leave encashment actually received. If this is the least amount amongst the four, then the full leave encashment will be exempted and nothing will be taxable. Number 2 is 10 months average salary. If this is the minimum, then this will be exempted. Number 3 is cash equivalent of unavailed leave calculated on the basis of maximum 30 days leave for every year of completed service. So number 3 is the cash which we'll get of the unavailed leave, which will be calculated on the basis of maximum 30 days leave for every year of completed service. So if I am getting that I have not availed more than 30 days leaves in a year, so that will be counted as 30 days only, because the maximum per year leave is 30 days. So 30 days into the number of years of completed service into the cash given for that unavailed leave. That will form this third point. If this is the minimum amount, then that will be exempted. Or lastly, the amount specified by the government, that is rupees 3 lakh. So amongst the four, whatever will be the minimum will be exempted from the leave encashment received by the employee from the employer, and the remaining will be taxable. What are they? Let's see once again. Leave encashment actually received, 10 months average salary. For this purpose, we'll be seeing what does the definition of salary here includes, because this forms a very important part, as we have seen in the previous incomes like gratuity, pension and HRA, that what exactly is includable for the purpose of salary here in this situation. So that also we'll see in the next slide. Number 3 is cash equivalent of unavailed leave calculated on the basis of maximum 30 days leave for every year of completed service. So mathematically it can be written as 30, if that is the maximum number of leave for each year, 30 into completed year of service into cash received from the employer for each unavailed leave. And number 4, the statutory limit of rupees 3 lakh. Now let us see some examples to understand this topic of leave encashment more better way. Let us see some relevant points regarding tax on leave encashment before we proceed to an example relating to this. And what are these points? Salary for the purpose of above computation means basic plus JNS allowance. It also includes commission based on fixed percentage of turnover achieved by the employee. However, any other allowance received is not to be included in the computation of salary. So, we had seen that one of the points for the computation of exemption was 10 months average salary. So, salary for that purpose is basic pay plus DA plus commission based on fixed percentage of turnover achieved by the employee. So, this is what we mean by salary in this case. Average salary is to be computed on the basis of the average salary drawn by the employee during the period of 10 months immediately preceding his retirement. It was given that 10 months average salary is to be taken into account. So, obviously, we'll just bring out the average of the 10 months immediately preceding his retirement. If the employee has received leave encashment in any one or more earlier previous years also and had availed of the exemption in respect of such amount, the limit of rupees 3 lakh specified above shall be reduced by the amount of exemption availed earlier. It may happen that the employee is availing the leave encashment in some previous year and now again he is availing that. So, if this is the case, then the statutory limit of rupees 3 lakh will be reduced by the amount actually availed as exemption in respect of such amount. Leave encashment received by the family members after the death of an employee is not chargeable to tax in the hands of the family member. So if my family member is receiving my leave encashment after my death, then that is exempt from tax in the hands of the family members. The retirement of employee may be of various kinds. It may be on superannuation or voluntary, such as resignation. This section applies equally to the case of voluntary retirement on account of resignation. So as we had seen, that was given in all the cases, whether government employees or non-government employees, that leave encashment received on retirement, whether on superannuation or otherwise. So this is the meaning of otherwise. This otherwise means that we can retire by means of resignation also. That will also be counted as retirement, and the provisions will apply accordingly. So this provision applies equally to retirement on account of resignation. So these are certain points which we have to keep in mind while calculating the exemption of leave encashment. Now let us see the example. Mr. Gupta retired on 1st of December 2014 after 20 years and 10 months of service, receiving leave salary of rupees 5 lakhs. So it is given clearly that he is receiving the leave encashment on retirement. So he is eligible to get some part of his leave salary as exemption if he is a non-government employee, and full salary, leave salary as exemption in case he is a government employee. Now, other details of his salary income are given over here. Basic salary 5,000 per month, which was increased by 1,000 with effect from 1st of April 2014. Dinners allowance 3,000 per month, 60% of which is for retirement benefit. So we have done this so many times, and now we know that only the DA forming part of dinners allowance as retirement benefit is included in the salary. Commission 500 per month. Now we have to just pay attention to this part, that salary included basic plus DA plus commission, which was based on the total turnover achieved by the employee. Only that commission is included in the salary. The commission which is based on the percentage of the turnover achieved by the employee, but here it is given as fixed, therefore it will not be included in the definition of salary for computation of exemption of leave encashment. Bonus 1,000, but that is not includable as we know, and here it is given that leave availed during the service is 480 days. So during his tenure of 20 years and 10 months, he availed leave of 480 days. He was entitled to 30 days leaves every year, and you are required to compute his taxable leave salary, assuming that number one, he is a government employee, and number two, he is a non-government employee. In both the cases, you have to compute his taxable leave salary. Let us see the solution. If he is a government employee, then we all know that the total leave salary received by him will be exempted. So this is very easy to compute in case of government employees. We deduct the full of leave salary received from the leave salary received. Therefore, the taxable leave salary left is nil. So in case of government employees, it is very easy to compute the exemption of leave encashment. Now comes the major calculation when he is a non-government employee. For non-government employee, we will deduct the least of the four conditions given under section 10 subsection 10AA for the exemption of encashment. And what are those four conditions? Number one was leave salary actually received. Number two was statutory limit of 3 lakh. Number three, 10 months salary based on average salary of last 10 months. So we'll first of all calculate the salary of last 10 months divided by 10, and then again multiply it by 10 to get the 10 months average salary. He was given 4,000 as salary till 31st March 2012, and from 1st April 2012 his salary was increased by 1,000 to rupees 5,000. So he retired on 1st of December. So till November we have to see the 10 months. So we'll see the salary for November, October, September, August, July, June, May, April, March and February. So from February we have to see, because February to November consists of 10 months. So for February and March he received 4,000 per month, and from 1st of April his salary was increased by rupees 1,000 and he started getting rupees 5,000 per month till 1st of December. So for 2 months he received 4,000, and for the remaining 8 months he received 5,000. So we multiply 5,000 into 8 and 4,000 into 2 and sum up to get the basic pay for 10 months, and in that we add up the DA forming part of the salary, that is DA for retirement benefits for 10 months. DA was 3,000 and 60% form part of retirement benefits. So 3,000 into 60% for 10 months. We add up all these three figures and divide it by 10 months, and then again multiply it by 10 to get the average 10 month salary, which comes up to rupees 66,000. So you got it, how we calculated the 10 months average salary. We computed the basic pay, computed the dearness allowance, we divided it by 10 months to get the average salary, and then we multiply it by 10 to get the 10 months average salary. Salary for this purpose, we have seen that from 1st April his salary was increased by rupees 1,000. So till March his salary was 4,000. So February and March he received 4,000, and from April to November he received 5,000. So accordingly we have calculated. Now the fourth condition. Cash equivalent of leave standing at the credit of the employee based on the average salary of last 10 months and maximum 30 days per year of service. And he was given 30 days leave every year. So he was in service for 20 years. So leave allowed to him was 30 into 20. That is 600 leaves were allowed. And he had availed leaves of 480 days. So we deduct the amount of leave standing to his credit. That is 600 minus 480. That is 120 days. So for 120 days, we'll calculate the cash which he would have received on the basis of average salary of last 10 months. The average salary of last 10 months we have already calculated in the point above, that is 66,000. So for 1 month it will be 6,600. So now leave due in days divided by 30 days to get the number of months and into average salary per month. So 120 days leaves divided by 30 to get the number of months for which he'll get leave encashment, and that will be multiplied by the average salary per month, which we'll get by dividing 66,000 by 10. So when we multiply it, we get 26,400. Okay, so this is how we calculate the fourth point. First of all, we calculate the leave due, which is equal to leave allowed minus leave taken. The leave allowed was 30 days per year and he was in service for 20 years. So 30 days into 20 years is 600 days which were allowed as leave to the employee, and it was given that he availed leave of 480 days. So the remaining leaves will be encashed. So the remaining leaves is 120 days. Now this 120 days has to be converted into month, and that will be multiplied by the average salary per month on the basis of the salary of last 10 months. So 120 divided by 30, so we get 4 months, into 66,000, that is the average salary of last 10 months, divided by 10 to get the average salary per month. When we multiply these two, we get 26,400. Now we see what is the least of the four. 5 lakh, 3 lakh, 66,000 or 26,400. So obviously it is 26,400. So we deduct 26,400 from leave encashment received at the time of retirement, that is 5 lakh. So the taxable leave salary is 4,73,600. So this is how the calculations are made when the employee is a non-government employee who is getting leave encashment at the time of retirement. The least of these four is deducted. What is that? Let us see us again. Leave salary actually received, the statutory limit of 3 lakh, the average salary of last 10 months, and the cash equivalent of leave standing at the credit of employee based on the average salary of last 10 months. So this is how the calculations are done. Thank you, students. Thank you for watching the videos. And in the next class, we'll do some more income which do not form part of the total income and are exempted from taxation. Thank you.